capital market is a market for buying and selling of loans or equity shares and other securities. So when I say capital market, most people tend to link it or confuse it with the share market. When you ask anybody capital market is a share market, yes, it is true. It is not false. It is also a share market, but it is also a market where you buy and sell not just equity shares. You also buy and sell loans, that is debt, and to also buy and sell all types of other securities, which we will learn as in the coming chapters. What are the other types of securities? This entire subject is essentially divided into two parts. Okay, part A will be all about concepts of capital market. What are the various types of markets? What are the various types of securities that you can trade? What are the various investment avenues that are available? Okay, and part 2, that is part B of this thing, will deal with what are the regulations, how is this capital market regulated, and even in each and every chapter it will be kind of divided into two. What are the concepts part, and secondly the regulations part. So it is divided into two parts. Okay, so as I said, capital market is essentially a market that is used for buying and selling of long-term debt or equity shares and other securities. Types of financial markets forms a part of the overall financial system of the country. Now let's go like a pyramid at a macro level. Capital market is a part of the financial market. So in the exam, if they can ask you a question, what are capital markets and how are they, what is their place in the overall economy of the country? How you remember it is, one of the parts of the economy has many parts, right? If you say, when you say the economy of a country, it has agriculture, it has defense, it has X, Y, Z. One of the part is financial system. That is one of the part of the economy. Okay. When you say financial system, one of the part of your, when you say financial system, it doesn't just mean capital markets. Okay. It means financial markets. It means agricultural market. It means commodity market. It means money markets. N number of things. Okay. One of the things is financial market. And one of the types of financial market is capital market. When you say financial market includes a lot of other things other than just shares, loans, and securities. It also includes commodities, it includes foreign currency, it includes gold and silver, it includes a lot of other things. Capital market is restricted to equity shares, debt, and other securities. Okay, that is all why it is also referred to as securities market at some time. So the chronology is capital market is a part of the financial market. It is one of the financial markets, and overall it is part of the financial system of that country. It is definitely wider than security market and embraces all forms of lending and borrow. So even people refer to it as securities market because that forms a major chunk of the capital market, but it is more than securities market. So in order to understand capital market, you need to understand first what is the financial system, what is the financial market. Okay, unless we understand these two terms, we will not understand where capital market comes from. So what is a financial system? Financial system is a system that allows the transfer of money between savers and borrowers. And this financial system covers both credit and cash transactions. Now, what do you understand by this? It is a system that allows transfer of money between savers and borrowers. See, I'll give you a very small example. I'll give it to you in the later stage. It is a set of institutional arrangements through which financial surpluses are mobilized from the units generating surplus income and transferring them to others in need of them. Now, how do I explain this? Let's say a person who I have some surplus money as an individual. What can I do with it? One, I can spend it. I can buy stuff and I can spend that money. The second option is I can save it. What do you mean by saving? Saving is I can just put it in a big box. When I have excess money, what are the options available with me? One is I can excess money hai to chalo, spend it. Have good stuff and spend it. Second is no, save. But when you mean save, what do you mean by save? You'll take all that money and put it in a big box and lock it in the cupboard. That is one way. We can say I have excess money, I'll keep it in the cupboard. The other way is I'll deposit it in the bank. or I will do an FD, or I will invest in shares, or I will invest in debentures, or bond, or X, or Y, or Z, right? What happens when you put money in the bank? These are all investment avenues. What you're talking, gold bonds, or shares, or stocks, or debentures. These are all investment avenues. We'll not get into the pros and cons of whether you get interest or whether you don't get interest, what are the returns, whether they're good or bad. That is not the concept here. We are trying to understand what is the financial system. Okay, so let's not go into returns part of it at this stage. That is a different subject altogether, which gives you higher returns and which is safer, which is more risky. That is not the concept here. The concept is, when I have extra money, I have an option to either put it in my house, keep it in my house and not do anything with it, or I can put it in the bank, or I can put it in any other investment avenue. Various investment avenues are available. What it does is, if when you put the money in the bank can then use that money to give loans to people who are in need of money. You have a surplus money, there may be a person who needs that surplus money, who doesn't have enough money, or he needs a loan. So how does the bank give a loan? Bank gives a loan out of your money that you have deposited. So what financial system does, it will mobilizes, when you see the first part of it, financial system, the system that allow transfers of money between savers and investors and borrowers. Okay, so a system which allows this transfer of money from the haves to the have nots, from the people who have excess to the people who don't have, who have a deficit, that is called as financial system. Okay, one is he can put it in the bank. Second, he said, okay, I'll do something better than bank. He can invest in the shares of a company. What will be the profit for him? The profit is, if the share price increases, he will get more and more dividend. He will get a better return on his shares when he sells it. What is the advantage to the company? The company can raise money to fund its project. If I am the owner of a company, if I want 1,000 crore rupees for a project, what do? Either I go to a bank, I take a loan from the bank, 1,000 crores ka, I pay interest to the bank. That is one option that I have. Secondly, I would say I don't want to go to the bank. I don't want to pay any interest. I will go to the people. I will come out with a public issue, what they call as IPO. I will come out with a public issue. Essentially, what I will tell people is, please invest in my company. Please give your money to me. I will issue you shares. If my company does well, I will give you lots of dividend, and the share price will automatically increase. You will get a lot of return on your shares. That is the promise that is made to you by the company, right? That is why you invest in the shares of a company. What all of this does is, it helps mobilize money which will otherwise lie idle. And the system by which this is done is called as a financial system. So from the exam point of view, what you need to learn is these two paragraphs and this first example. What you need to stress is the system which allows a transfer of money between savers and borrowers, that is investors and borrowers, both cash and credit, through which surpluses are mobilized from units generating surplus income, transferring them to others in need of them. Then what is a financial market? Financial market is a market in which people and entities, that is corporations, organizations, can trade in financial securities, commodities, fungible items of value at low transaction costs and prices that reflect supply and demand. Securities include stocks, bonds, commodities, precious metals, agricultural goods. The term market is sometimes used for what are more strictly exchanges, organizations that facilitate trade in financial securities. It may be physical location. Okay. What is essentially a market? So financial market is basically, we have seen what is a financial system. Okay, what is the financial market? Is it a type of a market? First understand that. How you remember, you said that this subject is a lot about concepts. So how you remember concept is, you analyze them logically. You ask questions yourself, you answer them yourself, and that is how you'll remember it. Then you'll never forget it. Okay. What is a market? A market is any place where we exchange goods and services. Simplest example I can give you is when you go to buy your fruits and vegetables in your local market. If you say visit Villeparle market, that is a market. What people are exactly doing there? They are exchanging goods and services for money. Okay, so a financial market, like in a subsidy market, what you are exchanging? We are exchanging fruits, vegetables, X, Y, Z. Same way, in a financial market, what you trade or what you buy and sell is not fruits and vegetables. You buy stocks, bonds, securities, precious metals, agricultural goods, you name it. Okay. Now, in that financial market, one part of that financial market is the capital market. Okay. In the capital market, what you do, you buy and sell securities. Either it is shares or it is bonds or it is any other securities. If you go to a bullion market, it is called as a bullion market. There you trade in precious metals, gold, silver, platinum. If you go to a diamond market, you will trade in diamonds and precious stones. Okay. If you go to an agricultural market, you trade in agricultural goods. So on and so forth. So capital market is a part of the financial market, and the market can be, it can be a physical location. As I said, it can be like your vegetable market. It can be at a physical location, or it can be online. Like nowadays, if you have BSE, NSE, there is no market as such. There is no place where people actually come. Earlier, and in earlier times, if you go to Bombay Stock Exchange, they used to have a ring. They used to call it as a trading ring. So it was literally a round kind of enclosure where brokers used to come inside and shout at the top of their voice that I want to buy sell shares, I want to sell shares. It was called as a trading ring. So actually people used to come together and buy and sell shares. Nowadays that doesn't happen. Everything is online. You buy and sell online. There is no physical location. Okay, you have NSE, you have a building called National Stock Exchange, but that is for administrative purposes. That is for the infrastructure which is required to keep that market going. Okay, there is no traders who actually go to NSE and trade shares. They trade via their computers. They don't trade by actually going to the NSE building. NSE is which manages the market. That building essentially is the infrastructure. So financial markets can be broadly divided into two categories. Each category can be further subdivided as shown below. See, this is the chart that you need to remember. The financial markets can be classified into money market and capital market. Above this financial market is financial system. Okay. Then it is capital market can be further classified into securities market, other forms of lending and borrowing. Financial market is money market and capital market. What is the need for a capital market? To raise capital for business, get money. So if I want to buy a vegetable, why do I go to a sabzi market to buy a vegetable? What is so interesting about going to a vegetable market to buy vegetable? I can go to the farmer's place and buy vegetables from there. I can bargain even more. I can go directly to the field where the farmer grows his vegetables. So I'll go to 10 different farmers. What it is, a market is a place where buyers and sellers come together. It is nothing but a platform where people who want to buy and people who want to sell come together, they meet, and in exchange of goods, services, ideas, whatever you want to buy and sell, that happens. That is why you need a market in the first place. So what does capital market do? It plays an extremely important role in promoting and sustaining the growth. It is a conduit to channel and mobilize funds to enterprises, private and public or government, efficient, effective source of investment, critical role in mobilizing savings for investments due to enhance country's long-term growth prospects. So what does capital market do? It makes sure that all the buyers and all the sellers come together. What it does, it's a win-win situation for everybody. As far as the buyer is concerned, as somebody rightly pointed out, if there are 10 people selling onions, I can get a better bargain. If somebody is selling at 20 rupees a kg, I can go to other person and he will sell me at 19 rupees a kg. I'll get a better bargain for what I'm doing. At the same time, that other person is, if he is just growing vegetables on his field and somebody comes and he can sell only to that person. If he brings it to a market, he has 100 customers or 200 customers who can buy his products. So he gets a larger audience. Okay. Same thing is capital markets or any market for that matter. What it does is it helps, it plays a critical role in mobilizing saving for investment in productive assets with a view to enhancing a country's long-term growth prospects. And it is absolutely necessary for continuous growth of the economy of a country. From an exam point of view, you can be asked a short question: what are the advantages of a capital market? Why do you need capital market is giving you a module? They can twist it around and ask you what are the advantages of a capital market. What do you write? What is a capital market? You write a definition and then you write at least 4 advantages. Okay. Part of capital market is securities market. Now securities market is again subdivided into 2 categories, that is primary market and secondary market. Primary market means a market which provides a channel for sale of new securities. The issuer of securities sell the security in primary market to raise funds for investment. Secondary market enables those who already hold the securities to adjust their holdings in response to change in their assessment and risk. See, this you just go through right now. Okay, this will be dealt with in much more detail in the coming chapters. Right now, you just understand it from a conceptual point of view. That if they ask you what are the security market broadly classified into, you say security markets are broadly classified into primary and secondary markets, and primary market is for sale of new securities. Secondary market is for sale of existing securities. Just remember these two words. Primary market is for new securities. Whenever somebody wants to issue a new security, he has to go to the primary market. If somebody already has a security and he wants to sell it or buy a security, he has to go to the secondary market. And the platform through which you buy a security or sell a security is called as a stock exchange. As I said, vegetable market is the place where buyers and sellers come together to buy and sell vegetables. So the platform or the place or the conduit through which you can buy and sell shares on securities, that is called as a stock exchange. And again, secondary market is further divided into spot market and future market. Then we come to market regulation. Now, any market where there is a lot of money involved, even your vegetable market is regulated. You have BMC which issues licenses to those vegetable vendors. Only if they have a license can they sell vegetables. Not everybody can sell vegetables. You and I cannot go to today, tomorrow carrying a thela and sell vegetables over there. You need to have a license. Okay, so every market is regulated anywhere. And why is regulation essential? See, when you want to understand a concept, I'll tell you a tip. You're appearing for a CS exam, the syllabus is going to be huge. Okay, if you want to remember it, how do I remember? Don't remember. That is my first thing. Don't try and remember it. You will never be able to by heart it. It is impossible. Okay, what you need to do is understand. That is the word you need to remember. Understand. And how would you understand it? If you understand the logic behind it. If you understand the logic behind the law, nobody is going to hire you as a company secretary for telling them what is the law. Everybody can read English. What are you doing great as a company secretary? Reading the law, you read from the book that this is section 135 of the Companies Act dealing with corporate social responsibility says so and so. Your MD or whatever employer will say, boss, even I can read English. Why have I hired you? Why has he hired you? He has hired you because you can interpret that section. And why you can interpret that section? Because you know why that section is there in the first place. Why has the parliament enacted that section in the first place? That is how you can interpret the section. So don't try and understand what is the law. Try and understand why it is that way. Why is the law there in the first place? Why do you need that law in the first place? What is the logic behind that law? If you understand that and if you remember that, that is very easy to remember. That is very simple to remember. Then that law can be 100 pages or 200 pages or 10,000 pages. That concept remains the same. And once you have understood that concept, then everything else is very easy. Everything falls into place like a jigsaw puzzle. Okay. So coming back to our chapter, for any market to function properly, function smoothly, you need a regulation. Okay, various laws have been passed from time to time to regulate this market to meet this objective. Now, just for your study purpose, the capital market regulations really kind of started on an institutional scale with the Securities and Exchange Board of India that was established in 1991. Okay. Earlier to that, it was not that markets were not regulated. Of course, they were regulated, but it was regulation through various different laws and various different government bodies, and there was a lot of overlapping, and it didn't, very honestly, it didn't serve the purpose. Okay, but 91 was a very important year. We opened up the Indian economy, we went from private, closed economy to a global economy. So the need was felt, and there was a lot of scams that took place around that time in the share market. So the need was felt that we should have one regulator who will regulate the capital markets. So that regulator was the Securities and Exchange Board of India. It was formed in 1992. And the main legislations are, First is the SEBI Act, by which SEBI came into existence, 1992. So this act established SEBI. Now this you need to understand. When I said you try and understand what is the logic, why are the laws in a particular way. This line is very important. You understand this line and you will understand whatever SEBI rules and regulations you are going to study in capital market subject. Whatever rules and regulations, all the chapters here, whatever takeover code, insider code, you have your ICDR guidelines, you have your DIB guidelines, X, Y, Z, all the guidelines, all the rules, all the regulations are meant to serve this basic purpose: protect the investors and develop and regulate the securities market. This is the vision. The main purpose of SEBI and the main purpose of any rules and regulation that SEBI promulgates is first and foremost, how can the investors be protected? You can write it down if you want somewhere. You can note it down. How can the investors be protected? Number one. How can there be more and more transparency in the capital market? And third, how do you increase the faith of the investor in the capital market? How can you increase the faith? By protecting him. Okay. So these are the three principles on which all the rules and regulations will be made. Second is the SCRA, which regulates transactions in securities through control of stock exchanges. So this SCRA basically regulates the purchase and sale of stock, securities, bonds. It regulates your stock exchanges through which you actually buy and sell shares. Depositories Act. Now we have a system where all the shares are in a demat form. Depositories Act is the act through which this whole system is run. Whatever you have in a demat, you must have heard the term demat. This whole demat thing runs under the Depositories Act. That is the act under which you have established NSDL or CDSL. These are the depositories. Demat is basically dematerialization. When you say material, it means if you have a share certificate, it is a material. Demat is dematerialization, something which is not material. When it is not material, it means it is online. It is in the form of an entry. It is in the form of a book entry. Okay. The entire demat thing is through Depositories Act. Now let's concentrate on this chapter. From your exam point of view, the question that can be asked is, what are the various laws that govern the capital markets? So these are the three major laws, and the fourth one is the Companies Act. So these four laws in together govern the capital market.